imagine spending years and, I don't know, millions of dollars moving your manufacturing out of China just to avoid a supply chain shock. And then, well, a fuel crisis in the Middle East completely shuts down your brand new factory in Vietnam anyway.
Yeah, that is an absolute nightmare scenario for anyone in procurement.
Seriously. Welcome to QIMA Supply Chain Soundbites. We're here to help you navigate the latest global quality, compliance, and trade trends. And we do this by analyzing the QIMA Quarterly Barometer report, which, pulls data from tens of thousands of real-world inspections and audits.
Right, and today we're diving into that late February Hormuz fuel crisis.
Yeah.
Because it was a massive wake-up call for supply chain managers everywhere. I mean, it didn't just disrupt shipping.
No, it really didn't. It completely exposed this huge hidden vulnerability in the diversification strategies that companies are basically betting their entire futures on.
Exactly. I mean, the playbook for years now has been moving production away from China to places like Vietnam or Bangladesh. But when the Strait of Hormuz closed, those alternative Asian hubs suddenly couldn't even keep the lights on.
Because they rely heavily on imported Middle Eastern fuel, right?
Yeah, massively. They need it just to maintain their basic factory capacity. So you successfully diversify your geographic footprint, but you completely fail to diversify your energy dependency.
Wow. So it's like buying a backup generator that relies on the exact same broken power grid as your main house.
That is exactly what it's like. It's a false sense of security.
But wait, didn't US and EU buyers realize this? Wasn't the whole point of nearshoring and reshoring to get off that specific global power grid entirely?
Well, the intent is definitely there, sure, but the scale just isn't. When the crisis hit, the capacity closer to home simply didn't exist yet.
So they were caught completely empty-handed.
Pretty much. Q2 data actually shows nearshoring and reshoring accounted for just 11% of EU and 7% of North American service volumes.
Oh, wow, that's incredibly low.
Yeah, both are lagging surprisingly below the 2025 averages that companies had originally projected.
So if Western nearshoring couldn't scale fast enough to absorb all those stranded orders, they had to go somewhere.
Right? And looking at the data, they went right back to the one place everyone was trying so hard to leave.
They went back to China.
They flooded back to China. Because Chinese manufacturing runs largely on domestic coal and renewables, it was totally insulated from the Hormuz energy shock.
Oh, that makes sense. They had their own power.
Exactly. So North America's sourcing share in China actually shot up to 35%, which is a high we haven't seen since early 2024.
That 35% essentially wipes out years of expensive nearshoring efforts in a single quarter.
It really does.
Yeah.
And the European numbers mirror that retreat perfectly. EU demand for Southeast Asia inspections just dropped off a cliff.
How bad was the drop?
Well, it went from a positive 14% year-over-year growth in April to a 5% contraction by June.
Yikes. But, okay, while North America and the EU have the luxury of pivoting back to China temporarily to survive a shock, the data shows emerging markets are in a totally different boat, right?
Yeah, because they never really left in the first place. They are locked into a severe concentration risk. Like China now commands 78% of emerging market inspection demand outside of Asia.
It's huge.
And for South and Latin America, it's actually a staggering 81%.
Okay, looking at that 81% reliance in Latin America, I mean, my first assumption is that they are just chasing the cheapest possible labor to keep margins down.
You'd think so, yeah. But the numbers point to something else entirely. It's actually driven by quality control.
Wait, really? Quality control?
Yeah, we're seeing a 26% acceptable quality limit or equal failure rate for emerging market electronics orders.
Okay.
And that's compared to just 8% for developed markets.
Oh, wow. Meaning their internal quality control programs just aren't mature enough to babysit brand new factories in untested regions?
Precisely. Buyers stick with China because the manufacturing and QC ecosystem there is already mature enough to catch those equal failures for them. It's a risk management strategy, not just a cost-cutting one.
Though there is a bit of a glimmer of hope for diversification in that region, isn't there?
There is, yeah. South and Latin America are actually showing double-digit growth in intra-regional inspections.
Oh, nice. So they're trading amongst themselves.
Yeah, it's a small-scale trend right now, obviously.
Yeah.
But it is organic nearshoring. They're finally building resilience closer to home.
And that organic growth is exactly what Western buyers need to replicate. If managers want to navigate this landscape safely, they have to move beyond just having, good intentions.
Absolutely. Which brings us to the practical takeaways for this quarter.
Right, let's get into those. What's step one?
Well, if there's one thing listeners need to do tomorrow, it's auditing those alternative Asian suppliers for hidden upstream fuel dependencies. You have to know where your factory gets its power.
Right, no more backup generators on the same broken grid. And the second step.
Number two, stop relying on planned nearshoring capacity. You need to convert that intent into actual scaled production before the next crisis hits.
Definitely. And finally, you can't safely diversify your sourcing if you're constantly fighting costly AQL failures, right? Maturing those internal buyer-side quality programs is what actually buys you a ticket out of a single country dependency.
Exactly. The real question supply chain managers need to ask themselves right now is this, will we treat the Hormuz crisis as a one-off shock, or will this finally be the catalyst that forces the West to accelerate real scaled nearshoring?
A very big question to leave you all with today. Thank you for listening to QIMA Supply Chain Soundbite.